Hello, my name is Michael Swanson. I run the website wallstreetwindow.com, and I believe we're approaching a time of wild stock market volatility and financial turmoil. This show is to help you survive and prosper in these times. To do this today, I have a special guest. I'll be speaking in a moment with David Morgan, who runs the website silver-investor.com. Hi, David. How you doing?
Doing well, Mike. Thanks.
Yeah, thanks for taking the time to do this interview. It's been a little while since we talked, and I consider you to be the expert on silver stocks and junior mining stocks, really, for that matter, too. And, before we were talking off air about, the gold stocks, the silver stocks, and the whole industry. And it's real interesting, some comments people make, or, they don't really understand the difference between, speculating or investing, or they're just simply scared to death of smaller cap stocks. And I know because I've recommended a couple to my people in the past couple weeks. And I don't know if anyone's even bought any of them.
Yeah, thanks for that introduction, Mike. Yeah, what we were saying is, I get comments from, our YouTube videos and our Twitter feed and all that, and that's fine. Basically, if you're trying to hurt my feelings, you probably can't. For the most part, I don't even read them. I have a staff that goes through them, and if they're really nasty, you pull them off. But I'm a pretty big advocate of free speech, so even the negative ones we usually leave up there. Everyone's entitled to an opinion. But what I was saying is that an article or an interview, radio interview actually, that David Smith, who's our senior analyst, did, was about making 10 times your money on some of the right chosen mining companies. And a lot of the comments were very similar from the aspect that they said, well, this is just gambling. You may as well go down to Las Vegas and, throw your money on the dice table and have the same chances. And I asked you if we could examine that, because it's really not true. And I'm going to use an analogy of gambling and go to the speculating. This is the speculating part of the portfolio, not the top tier or the mid tier that we feature in the Morgan Report, where big money goes into big companies, but the speculation section where you bet a little to win a lot and you spread it out. But let's use the horse race analogy. Almost everybody listening is familiar with the horse race. But if you're at the Kentucky Derby, and I had the honor of being there one year, it was really a thrill. One of my bucket list things, and I don't have a lot on my bucket list. But anyway, the race starts, and you've bet, pretty good amount on this horse. And halfway through the race, you see that the horse that you bet on is dead last. Now, in the gambling world, you can't go back to the window and say, you know what, I changed my mind. This horse looks like a loser. I know I can't get all of my money back, but I can get, whatever I get back. I can get half of it back. And then you take that money and you say, I noticed that the horse in the lead was like 6 lengths ahead, and his name is X-Ray Vision, and I want to put what remains of my money on X-Ray Vision. Now, that may sound really stupid, but that's exactly a great analogy for what you can do in the speculative mining sector. You can do it in investing in general, but I'm focusing primarily on these smaller companies that move a great deal both directions, up and down. So if you buy one stock and it's failing, first of all, I would say you are doing yourself a big disservice. If you play the speculation game correctly, I think you need a minimum of 10. I don't like more than 10. There is no perfect number. If you listen to one of the best investors in the world, and this guy's probably better than Warren Buffett, although no one ever hears his name, and that's William O'Neill, started Investors Business Daily. And I had the honor and privilege, I'll say, of learning from him back in the very, very, very early days when IBD was first founded, and he actually used to do the investment conferences himself. But he says if you can't pick 6 stocks and get it right, you don't know what you're doing. And I pretty much agree with that if you're looking at mid-tier or top-tier companies. When you're looking at speculative companies, you need to play it with odds in your favor. And the way I teach it is to put equal dollar amounts in the 10 speculations that we've looked into, researched, etc. But to think that we know which one is our favorite, that's like the horse race again. But again, going the horse race. And I don't have a favorite in the speculative section. I don't want to do that because people get their hopes high because they'll put more money on one horse than they should. Horse being an analogy for a company. So that's something that people don't think about. I mean, if you talk to Rick Rule, if you've got the kind of money that you could have under management and get to talk to Rick Rule as your investment counselor, he would, I don't want to put words in Rick's mouth, but it's basically the same thing. He will tell you, take your money out of the loser and put it on the winner. And you can do that here. What happens, Mike, and I want you to, give me some feedback, is people get attached to the story or the company management or the location or this. Most of the time it's the story, and I call these things story stocks. And it's almost as if someone can out-story somebody else about, oh, this is the highest grade mine that have ever been on the planet. It doesn't assay properly, but that doesn't matter because blah, 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 blah. I mean, I've heard almost every story you can come up with in the mining business, and I'll tell you, most of them are pure crap when it comes to these, let's say, less than common sense situations. And there are plenty of them out there. And there's going to be more probably than ever when the next cycle really gets to the top. So I'm looking, 2016 or 17, there'll be a lot of, let's say, less than ethical small junior mining companies will be throwing themselves at you, telling you all kinds of stories. Anyway, what's been your take on this, Mike? I mean, you deal in the sector. You know people get upset, but are they willing to get off that horse and get on the one that's winning?
Well, I like your horse analogy because last year they opened up, well, a couple years ago they opened up an off-track betting place about 20 minutes away from where I live. And last year I went down there a couple times. I don't know really that much about horse betting, but I just thought, just something to do, go down there for a couple friends, have a couple beers or whatever. And after I went down there and lost like 30, $40 the first time. Then I went back home and just read a little basics on the internet about horse betting. And you can buy things called the daily, I think it's called the daily race form, that'll show you the projected odds for the races the next time you go and so forth. So to make a long story short, 1 to 3 odds is really good odds for a horse. And the morning odds are created by people at the racetrack. And then when you go and watch the horse race, on TV right before you bet, the odds all change because people are betting, and moving the odds around by their bets. Well, I thought that there's something called an overlay where if you have a horse that the track people think should be 1 to 3, and then it ends up the odds end up being 1 to 9 or 1 to 12 or something, then that's what they tell you should bet on that. Well, I went up there by myself and I saw this one. I just bet $1 or $2 on every race just for the fun of it, and would lose a little, win a little. It didn't really matter, just playing around. But then there was one race where this overlay thing happened, and the horse that should be 1 to 3 according to this sheet was now paying like 1 to 20 or something. And so I put down like $20 and won a couple hundred. Went home and I thought, well, gee, this is easy. I'll just do this again. And I went down there 3 or 4 times and never saw another bet like that appear, and just lost all the money I'd won by just betting on whatever. And what I want to suggest is like the mining stocks are the same thing. It is, in a sense, it is a horse race if you don't know what you're betting on and you're just betting to be betting because you want action, and if you drive 20 minutes down the road to an off-track betting place, you're going to bet. But I think the advantage we got is that we don't have to bet on everything. And, if you just want 10 stocks, well, you got like 1,000 to choose from. And that's what you got to think about is how do you choose those 10 or 15 or 20 stocks or whatever.
Well, exactly. And that's, where our team, goes to the properties, and, we go to a lot more projects than we report on. And I want to be very clear here, Mike, my work, that we are not in the same genre as most of the newsletter writers, meaning that most of them in this sector focus on the itty bitty micro cap companies. We don't. We are much more aligned with, let's say, what a fund manager would do. And we, again, put big money in big companies, and that's the top tier, which are pretty much buy and hold, and then the mid-tier section. And, it's funny, some of my Vancouver friends call our speculative list blue chips. And the reason they're blue chips, some of them are earning money. And, But nonetheless, I consider them speculations, and you do have to spread out, et cetera, everything we've just talked about. But I like the idea that, you don't have to ride the horse to the end of the race and lose all your money. You don't have to come in last. You can reevaluate your portfolio at any time. You can make wise choices, but most people aren't willing to take a loss. And the reason I think, I want to talk about this is that it's psychology. And having been in the futures market as long as I have, if you're going to win at that, and that's really tough, that's like playing in the top tier investment game, because this is where you're going against really high end professionals and computers and algorithms and all kinds of crap. So if you can win at that, you can win pretty much anywhere. It doesn't mean win every time. It means, proper money management, proper attitude, willingness to take a loss quickly and move on, that type of thing. But, you can bet and bet and bet. And if you bet properly, as you're suggested, and betting is almost the right word when you're in this very micro cap stock area, just bet wisely. Don't bet too much on any one race. And then when you get an anomaly, as you suggested, that is where you might increase your bet. And the way I do that is when the company progresses as well as the story goes, or gets ahead of the story or better than the story. For example, we had Western Copper in a portfolio when it was basically a copper company, which in a way it still is. Of course, it was changed its name to Western Silver. Silver companies get a far higher PE ratio than a copper company does. Looking at 10 to 1 PE versus maybe 40 or 50 to 1 PE. Just changed the name. And that Penasquito deposit, which I went and visited, was not really that good a grade, but it was massive, 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 massive. And that company was bought by Glamis, and then Glamis was bought by Goldcorp. So you made about a 40 to 1, a 4,000 bagger, 40 times your money, had you bought when we suggested, and had you rode it all the way up. And but what we did with that company was, when it was a microcap penny stock kind of thing, and it moved up substantially, maybe fivefold or something, we revisited the company and said, it's a safer bet now. It's going back to the track analogy. If you go, halfway through the race and see which three horses are in the lead, and you put equal dollar amounts on all those three horses, and they all have, 10 to 1 or greater odds, hey, even though you lost 50% on the first one, you got your money back on. Now you spread it out between the three leaders. Guess what? Your odds are highly favorable that you're going to, make some money still. And again, I use the analogy because it makes sense. This is the kind of thing. But people, for whatever reason, and this is where I want your comment, you didn't comment on it, I don't think, Mike, is they get on this horse and they ride it to the ground, meaning they lose all their money or almost all of it before they'll get off it. And it just irritates me, It's just like not willing to admit when you're wrong. And, I don't like it either. I mean, most people have a hard time, but, if you're going to succeed, especially in the futures market, you have got to say, I'm wrong. The market's right. I'm wrong. I don't care if it's manipulated. I don't care that the banks came in and shorted. I don't care. I can't worry about this stuff. What you have to say is, market, for whatever reason, says I'm wrong. I'm wrong. I'm out.
Oh, for sure. And I can't remember the statistics off the top of my head, but something like they claim like something like 90% of people that are trading futures end up losing all their money in it. But to me, like the I don't think most people, and it's not just the smaller, more speculative stocks. And frankly, I've been buying a bunch of them the past couple of weeks. I mean, I've built a core position around big cap miners and ETFs, but I'm also putting like, it may end up being about 20% of my money in probably 20 speculative junior mining stocks, the types that, you're speaking of. But what gets me about it is that, I think most people don't really have any plan, or they don't have any idea of what they're really buying. They just, like you're saying, they buy into a story, but they just don't do that. These small stocks, they do that. The big ones too. What's someone doing that's buying Facebook or Yelp or one of these high flyer internet stocks like P 200 or something? Yeah, it doesn't make much sense either. So, I just think they kind of have a misperception that, well, if I just buy something big, a big cap, that means it's safe. That's not necessarily true. And yeah, there are more failures in the small cap world, but I mean, that's the nature of small business and, everything that goes around that. But in the end, I mean, even if I put 80% of my money in big cap stocks, that 20% in the next couple of years may make more than the 80%.
Right. Well, I know we're about out of time, but let me just finish up and quote Bill O'Neill, again, founder of Investors Business Daily. He starts off his lecture and he says, all stocks are risky. And he's right. Big cap, mid cap, small cap, they're all risky, all of them. And just the idea that, big caps are less risky, you can make, I don't want to go into the argument. All stocks are risky. That's a fact. And then what he says, and it cracked me up because, I've been playing in the junior market for a long time, although I don't emphasize the Morgan report there. We certainly look at them and we do report on them, but that's not what we spend, our big money on. Our big money is, again, on the more powerful companies. But he says cheap stocks are cheap for a reason.
Yeah, that's like one of the few things he said. That's one of the things that really stand out in my head. Yeah, that's right. That's right.
Well, I think we're pretty much out of time, but I'll hand it back over to you. Thank you for the opportunity. And
Oh, wow.
if I can get a little bit of self-promotion in, if you're willing to check us out, just go to our free stuff first. The YouTube channel is called Silver Guru. The Twitter feed is at SilverGuru22. And if you go to the website, themorganreport.com, there is a free once a week email letter for free to kind of let you into our thinking process. We usually take a question of the week from our readers. And then if you're more involved in this sector, then certainly you can check out the paid membership section.
Yeah, I want to throw one last thought at you too before we go, and that is one other thing I've noticed over the years is I think it's human nature, but a lot of people they have their investment. Let's say they're in gold stocks, or let's say they're in the Nasdaq, whatever it is. They're in a market, and I think a lot of people tend to just put down any other market outside of that and just think, oh, it's risky, or I don't want to be a part of it, as a way to talk their own positions up. So I think a lot of that goes on of people that think, oh, mining stocks are risky. They're just content to, they're just, don't want to sell what they own to get into something, even if it has higher potential.
Yeah, well, I'll follow up a comment on that if you don't mind. I know
Sure.
we're
Go ahead.
kind of, well, first of all, I'm going to sound like I'm talking out of both sides of my mouth, but if you hear me out, it may make sense. I think specialization is very, very good for the type of work that I do because it allows me to focus almost all my time and energy in a certain sector. So to get into that sector, you want someone really, going to bat for you, really doing
Sure.
their due diligence for you so you can make wise decision. But I couldn't put the time and effort into the entire market and come up with a report unless I expanded the staff by a factor of, I don't know, 10 or something. So I'm very content. Plus, I love this sector. But to back up and move to the other topic, I've been in the mining sector since I was in my teens. I started investing when I was a 16-year-old kid, and I've learned a lot, and I'm still learning. But after the first bull market in the gold market, and it peaked when I was 27 years old, I stuck in there a little bit too long, but still basically made money on the first run and just kind of cooled it for a while. And I got involved with a financial planner. It's a long story, but I'll keep it succinct. He pointed out an opportunity in the cellular phone industry. And this was way, way, way back before the cellular phone industry even was just much more than an idea. And I brought this opportunity to my dad because I was basically out of money to invest. I had some, and I did invest some in the cellular phone industry. But my dad said, this is the opportunity of a lifetime, David. I just can't believe what's going to happen. And even his vision of where the cell phone industry would go was weak compared to where it really has gone. And so my dad did very, very well by shifting out of, my expertise, the mining sector, and into a new, field, the cell phone business. And, I just want to point that out because, I'm not addicted to silver, et cetera. I mean, I'm certainly on the honest money, honest financial system bandwagon. I think anyone's listened to other radio interviews about what I do and teach and, all that understands that. But I'm also saying that I am flexible and that there's a time to sow and there's a time to reap. And I love the fact that my dad was able to see something that I saw it as an opportunity, but he saw it as for the opportunity that it was, and it served his investment purposes very, very well.
Well, definitely, and I think all that said, I think now's the time to load up on this stuff on silver stocks and gold stocks.
Oh, you're making me laugh. I agree. From all my technical work, and I know you do technical work too,
Yeah.
sentiment indicators, all the stuff we use, I agree. Now it's definitely time to accumulate. Doesn't mean you have to buy the whole boatload now, but certainly you got to start loading something into your boat because now is the time. I agree with that, Mike.
That's right. That's probably a good note to end on. So thanks for taking the time to talk to me. We'll definitely do another interview soon.
Thank you, Mike.
Silver123.net is a silver saver program designed to be as simple as possible. For as little as $50 per month, you can set up and create an automatic cost average buying program that will get silver or gold sent to your door on a monthly basis. The first step to creating an account is easy. You will supply some basic information. Next, you will add a bank account from which you will schedule your purchases. Scheduling purchases makes saving easy. Silver Saver is customizable and allows you to control the amount and the date of purchase. Once you are signed up, you are then given your affiliate code. Now you can save in precious metals and also market this program. You can use email, web pages, and multiple forms of social media to share the Silver Saver program. Silver Saver will reward you generously with physical silver or gold whenever someone you refer becomes a saver. Silver Saver not only provides you with a share code, but also allows you to place your own banner ad on a website of your own. Silver Saver is one of the best ways to start saving and accumulating gold or silver, especially at these levels. Visit silver123.net and start saving today.